fantastic. How about yourself?
Good. You're a little quiet there. Let's do another sound check for you.
Maybe get the mic closer.
Oh, okay. Hold on. Stand by.
Oh, that's much
Getting
better.
there.
There you go.
Mm-hmm.
Okay, so that's fine?
Yeah,
Yeah.
good.
All right. Perfecto. Okay, so rewind a little bit. Hey, Scott. I'm fantastic. How are you?
Outstanding. Full turkey. Thank you.
Steve, how are you, my friend?
Fine, still working off a food baby, and enjoyed a couple of nice days off there, recharging the batteries.
Absolutely. And I hope everybody had a great Thanksgiving weekend, a little time off. Hopefully you're digesting, as Steve said, all of your food babies are pretty much digested now. And, you know, we've got some really good things to share with you guys today, something to start the week off and give you guys something to keep your eyes on moving forward. Before we get into the good stuff, though, just want to take the time to get the disclaimer out of the way here. I just want to make sure everybody is aware that we are publishers of information here. That's what we do. We give you the information that you want, that you feel is relevant to the markets. We do not give investment advice, so everything that we share with you here today is for educational purposes only. If you do need the services of a registered investment advisor or a Series 7 licensed stockbroker, pretty simple to go to Google and find those registered people if that is what you need. Okay. Now, before we get into the itinerary today, I just want to make sure that everybody's aware of the new webinar schedule that we've kind of did some moving around as of late. We used to have 2 webinars on Wednesday, but we've moved Mr. Gomez's Trade of the Week from Wednesday to Tuesday. So now we have 1 webinar Monday through Thursday, nice and easy. Give everyone the Friday off. So Mondays, it's always going to be myself with Steve riding shotgun with the office hours. Then on the Trade of the Week, that's Steve and Mr. Andy rides shotgun with him. And then on Wednesdays, we've got Dan and Brad with the Q&A webinar. And rounding things out, we've got Andy's Trading Studio on Thursday, and I'll be riding shotgun on Thursdays with Andy. So 1 a day, Monday through Thursday. As well, we've got the Traders Room hosted by Mr. Barry Anderson. Once again, this is a free room, and getting a nice crowd in there, pushing 600 people. And with the new year coming up, that crowd is probably going to increase, and it's not growing because there's not good stuff there. The reason it's growing is because people get great value out of what Barry does in the room. So if you have not been taking advantage, you might want to check that out. All right, so what are we going to talk about today? Well, of course, keeping with tradition, we're going to let Steve break down what the overall market has been doing and, what it might do moving forward. We'll get into the Holly recap as well. Pretty light trade count for Holly today. Of course, keeping an ear to the ground and being in front of the screens all day myself, that was kind of the consensus. A lot of people making jokes on Twitter about, well, holiday must not be over, getting a light volume day today, et cetera, et cetera. In all actuality, I kind of think that's good because everybody's kind of, rubbing their eyes and shaking off the holiday fog a little bit. So a slow Monday, not necessarily a bad thing, so that we can focus, set our sights on what might be really important in the remainder of the week. So we'll get through the Holly recap. We'll talk about the SPY 50 window that we spoke about last Monday, and how to keep your eyes on that, expectations of what it might deliver. The interesting thing that we'll talk about today on that window is, we were pretty much in a downdraft all day, and the window still spit out some pretty interesting stuff. So what we have to keep in mind when we do get to that section is, we have a small up day or a big up day or anything in between. That window is definitely one you're going to want to pay attention to. And then rounding things out as always, we've got a few price alerts for you guys as well. So Steve, if you're ready, sir.
Yes.
flip it over to you,
I'm
and
ready.
you can do your thing.
I'm always ready. Okay. So we like to talk a lot about market health and market movement using the SP 500 or the proxy, in this case, the SPY ETF. What an interesting couple weeks it's been for the people who were probably loaded up short, only to find out they woke up the next day with a broken neck and have been probably trying to work out of those shorts religiously. In the last webinar I did, I talked about what's working, and what's continuing to work are a lot of short squeezes, and we'll highlight a couple of those for you later in the broadcast. But going back to the bigger picture here, we've got two lines. This was our range that we kind of still see as a pivot point. We got resistance here, and then support here, then it went back to resistance here, then kind of back to resistance here, and then we pushed through. So this line is still valid. I'm going to leave that there. This line here was the taking out of the all-time highs in the S&P. So obviously we want to leave that line in there, because what happened today? Well, we've been having this train leaving the station type action for the last couple of weeks, where you don't get much of a pullback to buy into if you're looking to buy into. At the same time, it's frustrating the shorts. They're not getting much of a pullback to cover their shorts either as well. Today felt like we had a little bit of change in that scene across the board. I mean, the IWM has been leading us incredibly. The small cap Russell 2000, that's what the IWM ETF is representing. But after 2 weeks of just explosive gaps and more explosions, gave back a pretty good red bar today. Looking back on this particular, I don't think I can go back that far. Yes, I can. Where we are. There we are. Here's the high up here, which corresponds, actually not. We're not at that high. Excuse me. We are, hang on a second. Steve is really losing his mind here. Let's try zooming out again. Thank you. Here's our all-time high. Here's our all-time highs. And zooming in, this is the all-time highs as well. So what I'm kind of getting at is here, I would not be surprised to see SPY, S&P maybe pull back to the scene of the crime, which they call it, whereas a prior resistance can be a future support level. And that happens all the time. And so that's kind of what I'm going to be on watch for. Today was a pretty good red candle. We could have some more follow through. The Qs really are still kind of a mess. They never really went to all-time highs like everything else. Diamonds, let's take a look. Same thing here in the diamonds. Not only did we have this, that's our current high right here. This was this line is very relevant and very current. It has nothing to do with zooming out and looking left. The Dow made their highs back here and basically found a level of resistance above. So we will keep that level of resistance marked up. And once again, it could be a short-term target for a pullback. So as you guys see, we've had a really good run for the last couple weeks. I wouldn't be surprised if we pull back to these orange line breakouts over the next day or two. And if we don't do that and just turn around and rip higher, well then so be it. That's just the way this market seems to be going, if that's the case. But old school textbook, price can't go in one direction forever. At some point they have to breathe. And I feel like the SPY and the IWM are certainly close to a breather, and I'll be watching those levels closely. Basically 219.50 in the SPY where they broke out from, and about like 129, let's call it 129 round right there in the IWM. And then for the diamonds, which is the Dow, we're basically looking at 18 or 189, we'd call it, on the translation of the ETF there. So it's been a great move. We pushed higher through all of our resistance, but stocks and indexes, they do have to breathe occasionally, and I feel like today could have been the beginning of one of those breaths. So that's what I'm seeing. Be careful out there, because if we're going to look for another day of pullback, there might not be a whole lot of opportunity on the long side tomorrow. But the good news is, we have Holly, and we'll see what she's going to fire up tomorrow. If she comes out of the gate firing up a bunch of longs, then at least I'll know it's statistically probable for longs to be taken. But my old spidey sense and trader gut tells me we may want to come back another day or so, maybe just even one day, and just try and tap the brakes a little bit. dig in and maybe build a higher high. We shall see. On the 15-minute today, there was something interesting that happened in the 15-minute. I'll go to the SPY. I believe it was 7:30 my time, so 10:30 East Coast time. The Dallas Fed came out with some numbers that apparently got the attention of some traders. If you were watching, we had a real big green candle up here, and then it basically reversed. Once we saw those types of candles intraday, that is a red flag. That's a major reversal off of something that pushed really high off some news, and then the market decided that it wasn't really worth that type of move. So a big topping tail here on a 15-minute intraday candle, and then a pullback. Pretty much set the tone for the rest of the day. No real direction today. So that was one of the things that I did take note early on, was that rejected candle. If you guys recall, this was a green candle, and then it just got completely rejected. And so that put up a big red caution flag for me at the time on taking longs for the day. All right, let me give it back to you, Jamie, if you're ready.
I am ready, sir. All right, ladies and gentlemen, before we get on into the Holly breakdown, and of course I seem to have lost my cheat sheet. Okay, there we go. All right, so before we get into the Holly breakdown, I just want to kind of share a little personal experience. I won't spend too much time on it today, but Steve and I were talking earlier. I had a little experience over the weekend. Thanksgiving was great. Everything was fine and dandy. And then on Friday, Jamie tried to plan ahead. He's like, okay, Thursday we don't want to eat leftover turkey. What we're going to do this year is we're going to plan ahead. And there's a great little place in my neighborhood. I picked up some lasagna, and I'm like, on Friday, Jamie's going to have lasagna. Well, Jamie had lasagna, and then Jamie had food poisoning. So Jamie was down for about 2 days, feeling oh so terrible, and it made Jamie realize that how much he takes for granted just feeling normal. And then I started thinking about trade ideas, and I'm like, well, along that same line, what would happen if trade ideas wasn't here? What would happen to Jamie if all of a sudden Holly and the windows that he watched, he didn't have access to? What he normally takes for granted if it was gone all of a sudden? And boy, let me tell you, it would not be pleasant. I'd be in disarray, not only from an informational void, not knowing where to look, what to look at, but then trying to replace everything that Trade Ideas does for me through other products. And I did a little hypothetical scratching about, okay, if I didn't have Trade Ideas, I'd have to subscribe to this charting service, I'd have to go to this platform for this, and I'd have to go to this platform for this. Well, if I'm, a user out there paying premium for Trade Ideas, that's, not quite $200 a month, a little bit less than $200 a month. Well, to replace all of that, what I would need, it was coming into well above that number,
when we used to trade on the retail floor in the early 2000s, and Andy was there, and other people were there. We all used Trade Ideas, and if ever there was the off occasion where the server went down or Trade Ideas froze and it wasn't working, we all just got up and went to breakfast. It's the honest to God truth.
Yeah.
The honest to God truth. That's how closely knit that was at the time for everybody, in that particular room. And it's the same thing today. We don't have as many outages, but when we had an outage back in the day, everybody just walked away from their keyboards.
Right. So just kind of want to share a little bit of insight, things that you don't normally think about until something happens. So, moving forward, I just, keep that in the back of my mind, and I'll be thankful. I'm thankful for Trade Ideas, even though Thanksgiving's over. Mm-hmm. Just something to think about when we're talking about the value that we bring to the table, to the trading community, especially for the price that we offer this technology at. Okay, so there's my little share. So now let's talk about Holly, who, by the way, guys, is the only AI engine available to the general public, hands down. So let's talk about Holly and what she did today. As we can see here, light trade count from Holly today. And of course, when we get into the P&L, the majority of that P&L was delivered via one trade today. Oops, I just Messed up my text there, but no big deal. I'd rather show you guys a bunch of nice pictures instead of some text here. So Holly came to the game today, the session, with 9 strategies. And we had 7 longs and 2 shorts. And of course, these 3 guys down here, which were all longs, were inactive. Not even one trade for those guys. And then we had a couple of one short trade from wait for the 8, and 3 short trades from putting on the brakes. All of the rest were long trades today. So all in all, only 11 trades from Holly today. And I'm sure those of you out there who go, man, I really wish there were more trades. And then there are probably just as many people out there going, hey, today was the perfect amount of trades. I could keep up with everything, so forth and so on. So a nice distribution, 3 and 3, 2, 1, 1, 1. Nice distribution from everybody. Wasn't one guy just, going off the rails today. So, that's what we strive to do, is to keep things consistent and, not force trades, because that's not what a statistical model does. Only when the trades come to it does it signal me, you, and everybody else. So let's do this. Let's just pull up the trade blotter. And typically, when the day is over, we're able to sort by risk on here. And typically what we'll do is we'll see some instances where Holly on the risk off is red, but on the risk on is green after a certain period of time. And that would allow us to, trade around that stock. But of course today, a little bit light on the activity and the volume, so we can see here that there are none of those today. As far as going risk on, which is staying in a trade when Holly's getting out so that we can try to make more than Holly, the only thing where that is even applicable is on the MMS trade today, but we can see that the spread there was for a whopping 18 cents, and usually there are many of them with a lot better spreads. But even if we take a look at this just to illustrate the topic, see, we're looking at 15s here. I'll just pop it back over here to 5s. So, the only example of a trade around today, or not a trade around, but a, going risk on as opposed to getting out when Holly did, is this guy right here, which was a short play. And if I just draw a line straight across, not too bad of an entry. When it comes to a short play, not too bad at all. Getting short right up here, shortly after we get the downturn. So Holly, of course, if we look at the reason that she got out a little early, simply because of her profit save algorithm that we've built in, so that she doesn't let those winners turn into losers. So, if we could have stayed in it a little bit longer, extra 18 cents on the table, but nothing to write home about. Now, the big winner today comes from this guy right here. And of course, once I spawn this chart, everybody's going to immediately realize what it is. Without even seeing the symbol, you could go, oh, shipper. Just from the activity that we've had, prior over this day period here. Of course, it was a shipper. And Steve and I and Andy, we've all been talking about the shippers since day one, when they first came onto the scene. And, Steve, of course, we had, that first day was great. And then, of course, once everybody hears that cattle call, everybody is going to rush into those stocks. So, there was a period where after Holly got into a couple and dry shippers went from, whatever that number was to up past 100 initially, hey, everybody wants a piece of that. So it's just like in the old days when we'd see that happen with the oil stocks. Hey, I saw this guy make a ton of money on this oil stock yesterday, so I'm going to pay attention to it today. Maybe you get a little bit of residual, but then it goes into the third day and the fourth day. So, this has been something that's been going on over the past week or so before the holidays kicked in.
Well, and it's also been going on over all the years. We call them the junk stocks, and occasionally
Exactly.
junk stocks will rally if there's a catalyst. In this case, we speculated the catalyst was the election, a change in infrastructure and steel and trade relations, and so you get these sectors of stocks. I don't care if they're junk biotechs, junk gold stocks, junk nanotechs, junk rare earths. I mean, we've been through them all, and they all have their 2 or 3 days of run, but then they break, and then they're gone, and they go to the other side of the mountain. If you click on that daily chart, you can pretty much see that giant red candle, and let's look at a couple others. Let's put up SHIP. You got to look at the daily chart and see, okay, 3 days, and then we're done. So that even after that giant big red candle, I still saw people trying to buy bounces. And that's the thing I'm trying to tell you guys. You've got to be careful. Once they have their 2 or 3 day move, and once they reverse, trust me, there's a whole other sector of traders out there that are loading up their short coffers to go short the board on these things and make a quick move, just like you see in hindsight there. So basically, these trades are handed from the Momo day trading upside guys overnight, almost immediately, to the merciless short sellers who will just continue to pound these things. And, I just wanted to remind people last week, one, when you see these junk stocks moving, they really are adult swim only. You got to be careful if you're a newbie and you're trying to click and point and click on E-Trade, and you're not going to get the prices you want. Things are moving way too fast, way too often. But if you want to play them, do them with small size and make it a learning experience. But the second thing is once they break and go on the other side of the mountain, they're done. And you've got to look at that daily chart and recognize that's done. And what does tops look like on the daily? Where's the broken candle on TOPS that should have shown us when it was done? Okay, it was probably that first red candle where it zipped up and threw up the giant topping tail. Usually you're going to see those types of topping tail reverses, and then you never really know what you're going to get the next day, gap up or a gap down. But in that case, the following day, buying dips did not work. And we understand it's human nature. I mean, animals do the same thing. Seagulls hang out at the same waste basket at Jack in the Box because that's where the French fries are. But one of these days, they might move that box, and the seagulls are going to be standing around wondering how they're going to get fed. Well, it's human nature to want to go back to that box where we had such a good feeling and had such good reward. But what I want you really guys to recognize is when these things break, when these junk stocks run for 2 or 3 days and then they break, please don't try to bid back into them. You may get lucky occasionally, like today. Holly saw some statistics in GLBS. But look, at the end of the day, it still became an adult swim-only type chart. And that's another dovetail that I had mentioned. Please get yourself familiar with what sectors these stocks they're trading in. You can easily do it if you have a single stock window and you double-click into any stock. It'll tell you this is a semiconductor, this is an airline, this is a oil and gas, this is exploration. And so it really does help to know, that GLBS was a part of this, insane activity that we had last week, and is a shipper, so should be held with kit gloves and be careful. But this GLBS is an anomaly. I have not really seen, you can go through the litany of on your own, guys, of the shipper stocks, and they all just pretty much, just went back to sleep. Dry ships is a perfect example of that. That thing just went back to sleep. So that was my just 2 cents. For anybody that missed, last week we talked a lot about these junk stocks when they rally. Just be careful, play them with small size, and once they throw in that giant upward topping tail and a big red candle on the daily, they're done. Just realize they are done. Let them go back to sleep. I understand the willingness to want to bid back into it and get that feeling again, but I'm telling you from experience and from losses, I'm trying to help save some losses for some of the newer traders who are making that mistake. So,
you're right, Steve, and it's totally a mental thing, because we're so angst-ridden because we missed out on this that we don't want to miss the boat, right? It's like lemming trading. Okay, we're just following the other lemmings off the cliff, where in a move like this or a sector like this, if you're in tune with the move initially. It's pretty, it's pretty cut and dry. Either you identified it, you saw dry ships, and then you identified the second, third tier stocks, and you got good entries. But the last thing you want to do is to be chasing candles like this. It just goes against everything that trading is typically when you're looking for nice, safe setups.
Yeah.
So
things can change quick, and you, as a good trader, have to have an open mind and be able to shift and turn on a dime.
absolutely. So now when we focus back on this GLBS trade today, now Holly produced this one, which, yes, it is a shipper. It's not dry ships, but it's still one of these that participated in the big thing. So you see it today, and you're like, well, this chart doesn't look too bad on a 5-minute intraday. You know, I think my risk is pretty low here, with Holly recommending a statistical play here. Now, had you purchased this and rode it with Holly, then you did have really good exit opportunities. Now, Holly, when we look at the reason why she got out and booked her $1.42, time stop. Little big guy kicked that one out. So little big guy, we can see right here, 60-minute hold time. 5, 10, 15, 20, 25, 30, 34. Right up in here is where she got out. Nice exit. Now, depending on what type of trader you are, if you took this trade and then you looked over here, because we always look to the left for expectations, and you see this thing just going ripping through these levels here, right? And then all of a sudden we're coming back down. Well, you know, once again, that's trade management 101. You know, hey, I got a nice pop out of this